Ever wondered what ETFs are and how they work? ETFs, or exchange-traded funds, are investment funds that you can trade on stock exchanges, much like you would trade individual stocks. But here's the twist. Instead of investing in a single company, when you buy shares of an ETF, you're investing in a broad array of assets. These assets could be stocks, bonds, or even commodities, and they're typically designed to track a specific index, like the S&P 500. But why should you consider ETFs? Well, they offer several benefits. First, there's diversification. By holding a mix of assets, ETFs can help spread risk. Then there's liquidity. ETFs can be bought and sold during trading hours at market price, making them highly accessible. Plus, they're generally more cost-effective than traditional mutual funds, thanks to lower fees. And let's not forget dividends. Some ETFs distribute earnings from the underlying stocks to shareholders as dividends. So, in a nutshell, an ETF is a diversified, liquid, and cost-effective investment tool that may also offer dividends. Now that you have a basic understanding of ETFs, let's dive into the different types and how you can invest in them. First, there are stock ETFs, which track specific indexes or sectors of the stock market. Bond ETFs, on the other hand, invest in various types of bonds. Commodity ETFs focus on commodities like gold or oil. If you're interested in specific industries, you might consider sector and industry ETFs, which target areas such as technology or healthcare. Lastly, there are international ETFs, which invest in markets outside your home country. Now let's talk about how to invest in ETFs. Your first step should be research. Understand what the ETF tracks and its past performance. Look into the fund's management expense ratio, the lower the better, and whether it fits your investment goals and risk tolerance. Then, you'll need to open a brokerage account. Choose a reputable broker with low fees and a good platform. After that, decide on a trading strategy. Buy and hold is suitable for long-term investors who believe in the underlying trend of the assets. Active trading, however, is for more experienced investors who want to take advantage of market movements. Finally, it's crucial to monitor your ETF investments regularly to ensure they align with your investment strategy and risk tolerance. Rebalance your portfolio when necessary to maintain your desired asset allocation. Remember, investing in ETFs involves making informed decisions, so do your homework, choose your broker wisely, and stay on top of your investments. If you're a beginner looking to dip your toes into the ETF world, we have some tips for you, but it's also important to be aware of the potential risks. First off, it's always a good idea to start small. This allows you to understand the market dynamics and gain confidence without risking a large chunk of your capital. As you gain more experience, you can gradually increase your investment. Continuous learning is another crucial aspect. Keep educating yourself about market trends, the specifics of different ETFs, and various investment strategies. Knowledge is power when it comes to investing. Diversification is often referred to as the only free lunch in investing. Don't put all your eggs in one basket. Spread your investments across different asset types and sectors to decrease your risk. Always consider costs. Be aware of transaction fees and the expense ratio of the ETF. These costs can eat into your returns over time. And lastly, think long-term. ETFs are generally considered a solid long-term investment. Avoid knee-jerk reactions based on short-term market fluctuations. Now, let's talk about risks. The value of ETFs can go down as well as up, depending on market conditions. This is known as market risk. Some less popular ETFs might have lower liquidity, making them harder to sell quickly at a fair price. This is referred to as liquidity risk. And finally, some ETFs might not perfectly track their underlying index, leading to performance differences. This is called tracking error. ETFs can be a great investment tool, but as with any investment, they come with risks. So, do your research, understand your risk tolerance, and consider seeking advice from a financial advisor. So, there you have it, a beginner's guide to understanding and investing in ETFs. We've explored their advantages, such as diversification and cost-effectiveness, and the variety they offer, from stock and bond ETFs to international ones. Investing in ETFs involves careful research, a sound trading strategy, and regular portfolio rebalancing. As a beginner, start small, keep learning, and consider costs. But bear in mind the market and liquidity risks. Remember, ETFs can be an excellent way to start investing, offering diversification, low costs, and ease of trading. But always do your research and consider your personal investment goals and risk tolerance. Happy investing!